Good morning, everybody, and warm greetings from Sunshine Holdings. I'm Hiran Samarasinghe, Head of IR for Sunshine Holdings. And it's my pleasure to warmly welcome you for the first quarter investor webinar for the financial year FY 2021. First, to cover some ground rules, I'll be keeping all the participants on mute. During the course of the presentation, and I'll later open it up for Q&A. Alternatively, you can use a chat function to send in your questions, and I'll direct them towards the relevant person. This webinar will also be recorded for information and then later uploaded into our investor relations website for future reference. Next, I would like to introduce my colleagues who will be participating on this side. So you'll get to know everybody. Given social distancing, we have a mix of people. We have Mr. Vish Govindasamy, our Group Managing Director, Mr. Shyam Sathasivam, our Managing Director for Consumer, Healthcare and Renewable Energy sectors. Mr. Aruna Deeptikumar, our Group CFO, next to me. And from their respective officers, we have Mr. Shantha Bandara, who is CEO of Pharma Division. We have Mr. T. Sandan, who is CEO of Medical Devices. We have Infiaz Ali, CEO of HealthGuard. From the Sunshine Consumer sector, we have Mr. Surit Pereira, Mr. Binesh Panangmala, CEO of Waterwell Plantations, where the agri sector comes under, and Mr. Aroshan Serasinghe, who is the GM for Renewable Energy sector. So without further ado, I would like to hand it over to Shyam to give some color on the recent acquisition of Sunshine Consumer. So Shyam, over to you.
Sure. Thanks, Hiran. Good morning to everyone. Thank you for being here. So we thought we'll start off with giving you a heads up on our most significant activity that's happened since the end of the quarter, which has been the Sunshine Holdings acquisition of the Dainty Limited Company. So primarily, this is in line with our journey of scaling our consumer business. As you would all know, our consumer business is the market leader in branded tea. And as we've grown in size and scale, we've looked to grow beyond tea in the Sri Lankan consumer sector, primarily in the food and beverages space. So therefore, what we've taken a step towards is scaling on that strategy. Having scouted opportunities, we've narrowed in on Dainty, family business, where the shareholders were looking to exit. Having done our due diligence, reviewed opportunities for us to scale beyond what they're currently doing, and what we consider adjacent synergies. We've looked to invest in this business. Having invested in the business, primarily what we're looking for is to bring our expertise in brand building, which we've done successfully in our current consumer business with Zesta, Waterwell Latte, and Run Kahata. We also have a very strong modern trade penetration, overall a very strong sales and distribution presence, which we think we will bring into this new business and be able to grow market share. Primary brands of Dainty, the company, have been the My Lady Chocomint, Benson's, as well as some snacks like Dainty's Bits, some chocolate in the sense of Cheeto, bubblegum, Extra. So across a range of confectionery, they are number one and number two in multiple sectors. Now, the largest sector, of course, for them has been the hard-boiled candies, going into eclairs, etc. This is where the Chocomint plays a significant role. They're big in the bubblegum space as well. Broadly, you're seeing across a range of subcuts of the confectionery space. They do a little bit in the chocolate space, a little bit in the biscuit space. Confectionery overall is a 7 billion market. Dainty is currently running at about 2 billion or so. We see opportunity for the growth. Chocolate is an 11 billion market, so there's more space for growth there. And of course, the largest sector is biscuits at 60 billion plus. So here are all opportunities we see. In terms of financials of the particular deal, you're looking at FY20 revenues of 1.9, nearly 2 billion, healthy profit at 10% at about 220. Primarily for us was the opportunity to acquire this business at what we felt was a reasonably good value of EV to EBIT of about 5.5 times. So this, given the fact that we are say a state of flux because of what's happening, but we felt that this was a stable, steady sector and in line with our strategy. So we've gone ahead with it. We can take more questions on this particular deal at the end of the session at Q&A. Thanks.
Thanks, Sham. Now, let's move on to group results. I'll hand over the forum to Aruna to take you through the results.
Thank you, Hiran. Good morning to everyone. Let me take you through the financial numbers. It is happy to announce that we have a good quarter, first quarter, even during the challenging time. We have recorded a 4.8 billion revenue, which is a 1.9% year-on-year growth, and also good growth in terms of the overall performance, that PAT 89.9% year-on-year growth. And also in terms of the contribution of the top line to the group consolidation, healthcare lead the top line 52%, and also consumer business 22%, and agribusiness 20%. So moving on to the next in detail numbers, you can see overall quarter by quarter year-on-year growth, mainly because of the margin improvements from some of the sectors, and also the cost optimization during the first quarter. And also we have a good EPS in terms of year-on-year growth, almost 100% growth in EPS. And also for presentation purpose, we have excluded our disposed agribusiness for the last year numbers. Thank you, Hiran.
Thanks, Aruna. So let's move on to the sectors. First of all, we have the healthcare sector. I think we have Sayandan, who will give you a roundup of the market, and then we'll move on to individual sectors. Sayandan, over to you.
Good morning, ladies and gentlemen. It was a very challenging quarter, as you would know, because it was a global pandemic which affected the local scenario as well. And in Sri Lanka, it was lockdown with curfew conditions, which brought up a lot of challenges for the healthcare sector. So as you may recall, we had the lockdown or the curfew situation starting from April 1st till May 11th. But in spite of all, our teams acted resilient to serve our customers, and we made our customers happy. How did we do that? Even during the curfew time, we obtained curfew passes. We catered to our institutions. Our distribution team effortlessly, non-stop, they catered to the private hospital, government hospitals going around Sri Lanka. And whatever the essentials, we ensured the customers got the product. In return, the patient got the product, what they needed to get. And this was also supported by some of our support services. We got down shipments, we cleared imports, we kept the regulatory status, all that. And to indicate some of the market conditions, as you may see it on the screen, this is the situation, or this is the market, how it behaved. If you see the hospital market, out of the targeted private market, April it was the 28% occupancy, going up to 55 in June. And it was no different. Even the government sector showed a similar trend, starting from 44%, going up to 66. So the market conditions were really tough. And even if you take the surgeries, you may consider surgeries as an essential element in one's healthcare condition. Even the essential surgeries were postponed. So all the elective surgeries were postponed, because if you take the operating theater beds in the private sector, April it was used only 26%, which went up to 76% in June. And the other segment we operate are the lab and diagnostic space. where the test, even the essential test, because of the pandemic, people postponed their essential test, because as you can see here, it's about 15% in April, which gradually increased in June. So these were the challenges which we faced for the healthcare sector. But in spite of that, our team acting resilient and working tirelessly during this period, we achieved results. And to discuss the results of the healthcare sector, let me now hand over to my colleague, Mr. Shanta Bandara, who will speak of the results of the healthcare sector.
Thank you, Sandan. With all the challenges that Sandan was outlining, we were able to perform a 4.9% growth for the quarter. As we were discussing, the lockdown of 32 days plus was there for many in Sri Lanka, but our teams were not under lockdown. The healthcare, especially pharmaceuticals, were essential goods which was needed for the general public. So we covered the retail, the hospitals, and the modern trade wherever they were open. We were able to cover and ensure that availability of pharmaceuticals and other items in our portfolio. With that, we recorded a 4.9% growth against the previous quarter. And with very carefully managing our overheads and also somehow getting our products to the retail, we were managing our overheads much below our last year actuals. Therefore, we were able to report a very fair EBIT of 10.8% for the quarter, which was a 22.4% growth. With that favorable EBIT, we were able to end the quarter with a PAT margin of 6.6% against the 5.7% last year, which again was a very fair number in terms of growth, which was 21.4%. So with this performance, we were able, I would say that we were able to end the quarter very well with the team efforts and covering the whole island with our products and supporting the national requirement at that point of time. So with that result, I would hand over to my colleague Infias, who will take you through some of the information at the retail front.
Thanks, Shanta. So, ladies and gentlemen, good morning. Let me start by just giving you some background as to how the whole COVID disruption impacted the retail business. We have essentially broken down our performance during this period into a pre-COVID time period, a disruption time period, a lockdown time period, and a post-lockdown time period. And in each of these time periods, you will see that there was significant volatility in our performance in terms of revenue. So the bar graph here shows our daily average revenue. Before COVID, it started with our usual average and then almost doubled in number during that disruption period. And it also then started sliding down when the lockdown happened. There was a drastic shift and a slide down in revenue once the lockdown actually happened. And then moving on to the recovery phase from the post-lockdown period. So this is just a quick snapshot of what happened in terms of revenue for the retail business. Kiran, can you move on to the next slide, please? So two things for us to be aware of. There was definitely an impact on revenue, and what was the impact on revenue we needed to understand, and how has shopper behavior changed due to this impact. So one is the fact that health guards operating hours dropped by 62% because of the lockdown. So we were able to operate actually only at 38% of our operating hours, which had a direct result in terms of our bill count, the actual number of people who came in to buy into the outlet, which was a negative impact. The positive impact, of course, was the fact that our number of items per shopper purchase has increased by 65%. That means there was a more quantity purchased by each customer as they did come into the store, which resulted in a 91% increase in terms of basket value. In terms of changes in shopper behavior, we saw two critical changes. One was the slide of pharmaceutical acute purchases in relation to, visiting the doctor and buying medicine that were needed only for a short period. And then there was also a switch towards the more of the wellness essential products that were related to COVID, such as hand sanitizers, masks, etc. We saw a huge spike in those sales. The next shopper behavior we actually saw was there was a 16% drop in average shopper time, and people's shopping behavior has changed, where usually health guards customers used to come during the evening time from the 6 to 8 o'clock to 10 o'clock belt. Now we see most of them completing majority of their shopping between 12 noon and 5 p.m. So these are two big takeaways for us as a business in terms of impacts to revenue and shopper behavior. So what this mainly means in terms of shopper behavior, if you just dive down deeper a little bit, footfall is still low, but it is gradually climbing. People are taking a lot more time to come into the stores. Shopping hours are limited. People are not coming into the times that I mentioned. And shoppers are focused on their own personal safety. That has been a big part of why the average shopping time has reduced. They are coming in with a high focused, high buying intention shopper mission, where they are only buying what they need. They are not browsing. The basket, which had an assortment of range before, is now changed to buying essentials, but a larger quantity of the essentials. And browsing, like I said, is minimized, and there is no luxury item purchase. And we have also, of course, seen the newer behavior in terms of higher degree of trial in the online platforms. So what this means to us is that since the average shopping time is shorter, the interaction and the opportunity for the sales process has also diminished. And our interaction with the customer also has changed in terms of, social distancing, face mask wearing, and the whole shopper experience has changed due to this new habits forming in the retail environment. And like I mentioned before, shoppers' mindsets have changed only to buying essentials. And now there's more willingness to purchase online, provided that the key promise of quick fulfillment is met. So as we make our plans into the future, these are some of the key things that we need to be mindful of as we move forward. With that, I will move on. I will pass it on to Surit, who will take you through the consumer side of the business. Thank you.
So good morning, everyone. Quarter one for us has been, whilst it has been negative growth, it has been much better than expected. After in the second 2 weeks in March, our sales went down significantly because whilst we service the modern trade, general trade, most of the outlets we couldn't reach. And also we had kind of stock out problems with the factory not being able to function properly, etc. However, in April and May, there was stocking opportunity in the outlets, and we gained from that. And also our main competition, Unilever, they took some time to really come into the market with tea, and then we exploited that opportunity. to service the outlets and then gain from that. Whilst we see that modern trade, whilst there was a significant increase in sales in March and April, then in May and June, it went down. One thing was they had stocked too much. And also the other thing was footfall was down. The footfall was down for two reasons. One thing is the shoppers had stopped. And also the shoppers tended to remain with the GT where they had gone during the lockdown period. This has been the kind of the phenomenon. So general trade, we have seen a significant increase in sales even in June and July. And our collections have been very good in this period. We have operating cash flow a plus of 196 million. This is coming from better collections. So what we did was we changed the sales pattern. So sales pattern was it was 60% in the second half of the month, where there were check returns happening at the end of the month, etc. Now it's a kind of a 50 or 40 between the first half and the second half, or at least sometimes even 55 and 45. So check returns have come down significantly, and our collections have been good. And even for the distributor, the collections have been good because we have reduced the wholesale contribution and focus on increasing distribution. Whilst by increasing distribution and bringing down the wholesale component, it has been easier in terms of collections for the distributor, because it is wholesale that demands a lot of credit. A lot of the sales to CDE outlets, smaller outlets, happens on cash. So this has been, we didn't have to give higher credit to our distributors. So overall, the business has been well managed, and we are happy with the sales as well. Going into the next slide, we see a revenue of a negative 15%. However, if you take the domestic business, the revenue is a minus 11%. This comes from a negative price growth of 10%, because in Q3 last year, we took a price reduction to compete more effectively with our competition, who took significant price reductions. So with that, there's a price revenue reduction, our volumes have been on par with last year in the domestic business. However, there has been a mixed change where our bottom of pyramid brand, Rankahata. So we have three brands, Sesta, Waterwala and Rankahata. Sesta has declined by 13%. However, the other two brands, Waterwala and Rankahata, have grown, and therefore the volume has been on par with last year. Our specialty tea business has got somewhat impacted. Specialty tea business includes our the specialty tea, that is Sesta, the extension of Sesta into specialty teas, which is present in our BIA and Liberty Plaza and other outlets. We have 4 outlets. And also amongst retailers who sell to mainly tourists. So with tourism going down, that has got impacted. However, our strategy is to really drive the domestic business and gain share to offset that reduction in the specialty tea business. So specialty tea business last year accounted for about 7% of the turnover. So our intention is to drive the domestic business hard to overcome the losses or the loss in revenue that will happen from the specialty tea business. And you see the PAT has increased into 70 million versus 58 million last year. Now this is coming from the fact that we controlled overheads, and also we controlled our support expenditure. We resorted to focusing on digital media to maintain top of mind awareness during the lockdown. So overall, whilst it is a minus 15% growth, this is better than what we expected, especially in terms of the volume growth. Yeah, with that, I'll hand you over to Binesh to take you through whatever the plantations and dairy.
Good morning, everybody. Equivalent to the other companies which had a challenging time during the first quarter of the year, we also, the agri sector also had its share of issues. Basically, in terms of worker turning out to work, we had a few issues with about 10 days where the staff couldn't come to work. So as a result, that our harvesting in the palm oil sector was delayed, which resulted some of the poor crop patterns that what we saw in the latter part of the quarter. However, the time was managed well. After that 10 days, of the first 10 days, that the staff came to work, and then we managed to get the revenue above last year by 10.6%, and also on a PAT margin of 56%. So which is around 406 million versus 260 million last year. Most importantly, the PAT margin of 41.7% versus 29.5% of last year. So going into the palm oil sector, it has been a kind of the performance of the company have been quite good on the second and third month in the first quarter of the year. But most important factor is in the agri sector, the other sector is dairy. Dairy managed to break even in EBIT in the first quarter. So this is the first time that which have been it have performed in that category. Mainly due to the reduction in cost during the first quarter of the year. When it comes to cost, the main cost is the feed cost. It was a challenge during the COVID season to procure the feed during the quarter. But however, the team managed to procure the feed at a lower cost, and also the continuation of the feeding happened. So as a result, that we had continuous kind of supply of milk, and the farm have been operating in good order. And as a result, that we managed to reduce the cost, and which is kind of a seen in the Q1, which will continue. So I would take any questions later on. Now I would pass on to Aroshan for the energy.
Thank you, Binesh. Good morning, ladies and gentlemen. I hope everyone can hear me clearly. So the slide in front of you shows the results for first quarter for renewable energy. Unlike some of our other business sectors, during these unprecedented times for the energy sector, it was business as usual. The results reflect unexpected rainfalls which we received, so which propelled our revenue to 76 million and a PAT of 4. The diversity in the numbers compared to last year was, last year FY20, there was a drought period which affected, and one of our plants had unplanned maintenance. So that's why the significant growth of 197%. So the slide reflects basically largely the hydro generation, which was helped by the unexpected rainfall. But just to spend some time in terms of our solar expansion, happy to note in terms of non-captive rooftop solar projects, we have already finalized 500 kilowatts, and we are in the process of finalizing another 1.3 megawatts. So in short, we'll be having close to 3 megawatts of solar coming on board, adding on to the 6.6 which we already have on the hydro side. So effectively by third quarter FY21, we'll be contributing close to 10 megawatts of renewable energy to the national grid. So thank you. That's a short synopsis on the renewable energy side. So I'd like to hand it back to Hiran for the Q&A. Thanks.
Thanks, Arushan. So let me open this up for Q&A. So if you have any questions, you can unmute yourself and ask, or use the chat function to come up with questions. Okay, so we have our first question from Sanjay. What is the impact of GNC bankruptcy?
Yeah, so I can take that. So our large principal GNC for wellness in the US, the parent company had filed for bankruptcy. Of course, as most of you would be aware, that's a more a financial restructuring exercise that happens in the US. We've been informed of the same. So far, we've not seen any disruption in supplies. So we hope, I think it'll just restructure their debt, etc., and we should be back on form. For now, we've had no indication of disruption.
Thanks, Shyam. The second one from Lakshita. How does the government decision to stop plantation and replantation of palm oil trees affect sunshine? I think Binesh, will you be able to take that?
Yeah, so currently the palm oil, the ban is kind of it's a temporary thing, but which have been kind of discussed at different levels. So that will not continue. We can, as of whatever plantation concern, that we have completed almost 100% planting in the area which we have, and the replanting is being permitted. So we can go ahead with the planting, and also that what have been planted, we will go on for another. Our crop will increase for the next 10 years.
Thanks, Binesh. I think moving on, we have one from Azim. I think this one is for Shyam. It's on Dainty. Sure. Number one, some insight into Dainty's distribution network and how many outlets and the mix of rural and urban focus. And also the Dainty's ability to pass on price increases, the raw material input price increase to his customer. How does this work?
Sure. So on the first one, I think definitely they are a more rural sort of brand. Their distribution reaches to close to 100,000 plus outlets, a lot more focus in the C, D, and E class outlets across the country, and less in modern trade and in A class per se. And that's been their brand proposition and affordability. In terms of price increases, broadly able to pass on some increases. Of course, they're subject to certain price points like the 2 rupee price point and the 5 rupee price point, to some adjustments in terms of jumping that price point. Some challenges are there, but broadly they've been able to sort of weather such impacts over the last few years.
Thanks, Shyam. I think the next one is on pharma. From Yasas, what is happening regarding the pharma price controls? And I think Shanta, if you can give an update for us.
Yes, thank you. With regard to pharma price increases, first thing is the price increases of non-controlled products have been taken place from some of the pharma players, and there have been certain concerns raised by the authorities which have been clarified at this point of time. So I think there is a mutual effort to clarify, and always the concern have been lobbying with the authorities to get price approval for the controlled gazetted products, where we have actually suffered as an industry from the exchange loss. So that has been the concern. How can we get our exchange loss being covered by a fair price increase? So those discussions are being managed, and we are very much a part of the industry chamber. So therefore, we represent in proper in those discussions.
Thanks, Shanta. So we have one from Rushir on Dainty. How will the acquisition be funded, and also on the growth rate of the confectionery industry, per se. So I'll take that. So it will be a mix of debt and equity, Rushir, right? Mostly debt. Out of the 1.7 billion acquisition price, 1.6 will be debt at whatever TC loan level, which will leverage its balance sheet to buy this asset. The balance 100 million will be infused as equity. They have cash inside whatever TC loan, they will infuse that. So it's a balance of debt and equity, mostly debt. On the confectionery growth rate, like over the last 2 years, it has grown at around 1.5 to 2%. Obviously, if you see the FMG market as a whole also has only enjoyed very small growth during that period. Going forward, if things remain like we expect the growth rate to slowly increase to about 5% over the next few years. Hope that answers that question. Moving on to the next one from Rafi. Would it be possible to quantify the synergy and what are the near-term quick wins to achieve this synergy? So as I think Shyam mentioned in his presentation, some of the big low-hanging fruits will be the modern trade product range. Also in terms of marketing, we will be using our extensive experience in brand building and replicating the same in the Dainty business to drive the business forward. Also, we see opportunities in the sales and distribution space where they have more reach and we have more intensity. So we are looking forward to work together on that and see what comes out of that. We are moving on to another one from Sanjay. How much currency depreciation before each segment? Sorry. How much currency depreciation does each segment suffer? What is the sensitivity at 1% depreciation? And how much has the group saved on dropping interest rates? Aruna, will you be able to take that?
Yeah. In terms of group interest rate saving compared to the last year, we were at approximately 11% last year. However, it dropped to the first quarter of this financial year, approximately 8%. So the saving is almost 3%. In terms of currency depreciation, actually, we have captured the currency depreciation, and also we have budgeted approximately 3 to 4% depreciation during the current financial year.
Thanks, Aruna. Moving on to the next one from Asanka. How do you see the FMCG space in the next 2 quarters with the reduction in income levels? Surit, do you want to take that? Give us your read on the next 2 quarters in terms of consumer spending.
Yeah. So in overall FMCG, we don't see that the market will really grow. However, what we have seen is in tea. In tea, the tea is almost an essential product. And also with the growth in water, what we have seen is the consumers are not really going to downgrade too much because of income challenges. The expense on tea, the food expenses amount to about 2% really of their expense. So what we have seen is, what we have observed with what has happened is that there is not going to be a significant impact on tea in terms of downgrading. However, having said that, I must say that we see that the premium end is reducing somewhat, and the bottom end, which is around Kahata, is increasing. However, overall, we see even in July, June and July especially, the growths have been good. and we are rather bullish on our growth rates.
Thanks, Suvit. We have another one from Yasas. On DNT, how much of an addition to top line and bottom line can be expected? So Yasas, I think, as Shyam mentioned in his slides, last year DNT had about almost 2 billion revenue and about slightly over 200 million operating profit. So the consolidation will happen for proportionately for 7 months for FY 2021, and we expect that to grow at like the market growth rate for the first year at least. Moving on to the next one, I think we have some questions from Sean on DNT again. Is there any synergies that could be realized via the dairy business? There are 3 parts to the question. Let me run through that. When will DNT be consolidated from, and how will you pay for the acquisition? I think the last one we have already addressed. Moving on to the second one, the consolidation will happen from end of August, so that will be the closure of the transaction. On the dairy business, whether there are synergies, we haven't looked at it in that sense, but obviously, given one of the key raw materials is dairy products, so we will look into that as to see what we can do on that front. Moving on to a question from Harinder. On DNT, what segments will you be looking to grow on the business, especially areas like wafers, chocolate, etc.? Would you need to incur further significant capex to grow these segments? Will you be bringing in new management to run it?
Yeah, let me take that one, Ram. So primarily, I think what we want to do is to strengthen the current segments. My slide sort of showed you some of the significant areas like hard-boiled candies, eclairs, etc., bubblegum, where there's toffees, where there's opportunity to grow more. So we will sort of look at that. There may be some capex to improve productivity and also improve capacity as we drive more growth in those spaces. We think the snacks space is an area that is showing growth as people do more out-of-home purchase of snacks. In the chocolate space, etc., there are some opportunities, but of course, DNT is a small player in those spaces. So that's where we will be. In terms of the management, this has been a well-run business that we have acquired. So therefore, the current management team will continue to run the business. The Sunshine support team from finance, HR, IT, marketing, etc., will sort of support the current team to keep growing.
Thanks, Shyam. Moving on to another question from Ruchir. We have a 2-part question, one on healthcare and one on consumer. On healthcare, what kind of volume growth did the pharma segment witness, and what is the outlook? I think Shanta, if you can step in for that.
Yes, actually, the quarter we experienced nearly about coming to about 8% plus volume growth in the pharma segment. So that was quite positive. Why this came through April largely, because April was a month where we saw quite a bit of patients coming in, and they wanted to ensure their daily dosage and monthly dosage, likewise they were stocking. So therefore, we supported, as I said earlier, by our distribution around the country. And we saw that the months May and June were a little bit slower than April. However, in the overall quarter, we saw a volume growth around 8% plus. Thank you.
Thanks, Shanta. On the second part of the question, I think this is for Surit. On the consumer business, has the price competition stabilized, or do you see more pressure ahead? Surit?
Definitely, we see that the prices have stabilized because the tea prices also, especially in the first half, was high. So we don't see competition reducing prices significantly at this time. So we are expecting a stable price environment in tea in terms of retail price.
Thanks, Surit. Another one from Sri actually. Who would be the main competition for Dainty in the confectionery segment?
So Dainty, there are 2-3 players. Perfetti, an international company, is in the local market with production. So they're a large player. And also I think Dali Butler with the hacks. So those are the 2 sort of broad players in this market.
Thanks, Sham. We have another one from Azim. Has EMSPL been phased out as indicated in the CSC disclosure earlier this year, or is it still the holding company of whatever TC loan?
Yes, still it is the holding company of whatever TC loans. We are in the process of phasing out EMSPL. The process is in progress at the moment.
Thanks, Aruna. We have one from Rashid. The government increased the palm oil levy in April-June quarter. Has whatever also taken a price increase? There was also a 10.6% increase in price in the quarter. Binesh?
Actually, we didn't get the exact increase based on the duty increase because of the kind of some of our buyers of oil that they couldn't kind of sell their oil in the local market. So it was not, the offtake was not that great. So as a result of that, they couldn't kind of take the price increase due to the duty. But however, there is a price increase due to the world market. We have there is a slight increase. So that is the one which is coming as 10.6.
Thanks, Binesh. Are there any other questions you would like to put forward to the management? We have one from Rishi. Can you elaborate on the long-term plans for the dairy business? Vish, you want to take that?
Yeah. Thank you, Hiran, for the question. So long-term plans for the dairy business, obviously right now we are still stabilizing the back end, which is the farm part itself. It's been 3 years since we started it. I think we have come to quite a comfortable position. We just still need to increase the herd a little bit more to get to a 1,000 herd milking farm. That was the original promise of our project. So we are about 800 herd right now milking. So we are working on plans to get to that 1,000. At the same time, we are also talking to various potential investors, partners, etc., on the entire front end of the retail milk product and other. Having a new segment in our business as Sunshine Consumer, we definitely see opportunity there in the dairy business. So that's the direction in which we will be going forward.
Thanks, Vish, for that update. We have another one from Azim. In EMSPL, is EMSPL raising or taking out that 1.6 billion cash inside it? I think that's related to the amalgamation. I think when it's amalgamated, it will obviously be a part of Sunshine Holdings. If that explains that question. Okay, so I think we've seemed to cover all the questions. If there's anything, I think let's wrap this up for this session. On behalf of Sunshine Holdings, I would like to thank everybody who participated and engaged with us during this session. So hope to connect with you in the next quarter and going forward from that onwards. Have a good day. Thank you.
Thank you. Thank you.
Thank you.